Hello friends, welcome to Forex analysis, EURUSD analysis with Myfxbook. My actual name is, by the way, Roman. That's how I call it in life. So now you know me by name. We are looking at EURUSD for our chart. That's what I trade. As you know, for the past months, I have been trading exclusively EURUSD. I don't even look at other person. I don't need. I concentrate on one thing and it is enough for me. What do you see here? You see Camarilla pivot points. If you watch my videos before, you can see how I trade Camarilla pivot points. I explained this in one of my first videos. You should watch it. It's very, very important to know how price reacts at certain Camarilla levels. Here you see monthly Camarilla levels, monthly Camarilla pivot points, and weekly as well. I also added yearly pivot points. Here you see the yearly pivot point, central pivot point, and the yearly MR1, median R1 yearly. In my previous video, I was explaining you about yearly pivot points, how price tend to reverse or establish yearly tops and bottoms at yearly pivot points, even at yearly median pivot points. And here we are approaching a yearly median R1, which almost coincides with 111 by 3 pips, by 2.2 pips. It doesn't quite reach 111, but let's say it's 111 approximately. So we are coming very close to this yearly pivot point, median R1, and I'm very sure price will make it to median R1 very, very soon. I think it will happen next week. So and I was in the trade. I entered right here in the bottom of the step, and I closed it at 21 pip before the weekend. Like on Friday evening, I caught even this small move because I saw the retracement, and it's pretty good level to enter. This level where we are now to go long. And that's what I did, but I closed it on 20 pips because I don't want to be in trade over the weekend because of swaps are very big right now due to the interest rates. If you're going long, you pay negative swaps, and overnight swaps in EURUSD are pretty high with IC markets, and IC markets in Australia is pretty cheap broker. It has one of the best prices and services, but still, even with them, the overnight swaps for EURUSD pretty high. I just why to be overnight? I can open another trade on Monday still. On Sunday evening is pretty good level still, so it doesn't really matter. I doubt price will pull back to the Camarilla close, I mean to the Camarilla pivot point, which is here at 1.8, because we had very strong breakout. There were no signs of reversal above R3, and you see we already touched the monthly roof. April roof had already been poked through, pierced through, but not yet broke it. 4-hour candle hasn't yet closed above it. But since we have a median R1 pivot, it's very, very big probability that price will make it there next week. And that is where we are supposed to see some sort of a bigger reversal, a major reaction above in this area of median R1 above the roof, April roof. So we will, what is my prediction? We will poke through the median R1. We will touch this level here it means we will break the roof, we will close above the roof, and very likely we might push back to S3, R3, this level, high 3 or R3, which is at 1.9. After we break this, we might push back to R3, and from there we might go to R5. Where is R5? You have to go on the daily chart to see how far it is. You see, it's very likely we might make to R5 by the end of the month, by the end of the months, which still have half a month, 2 weeks. So we will break through here, very likely. I don't think we will go in one shot to R5, then we go back to S3, and by the end of the month we might make to 112.6. We might get there by the end of the month, or we might even reverse at this level. It happens often that price does reverse from the roof, but we have to reach MR1. That's very median pivot. Very likely we will be there. I will be going long. And you see here we broke through the roof last month in March. We did break the roof of March. The blue line is the roof. You see we broke, and we did exactly the same thing. Broke the roof, closed at the bow, push it back to R3, you see, to the pip, and then we continued to the roof, to the breakout level through the roof. You see, we ended at R5. Price like made it to the pip, like maybe half a pip missed at R5, but almost there. We will be there next week at R5, even higher. So you see, price, as I told, not always makes it to the breakout target R5 immediately. When it breaks the roof, it pulls back to S3. Then at the start of the next month, it makes to the March R5, and that's what we did. So that's typical, you see. And here we didn't even close beyond the opening range, Camarilla opening range, S1, R1 to S1. You see this blue shaded area, and this is monthly open or previous month's close, the black line, Camarilla pivot. So you see we reversed it in March back to the close, and then we continued through the roof, and through the reversal level and through the roof we continue to target to R5. The trend will continue, and in a similar fashion, I believe, as it was in March. Why? Because the bulls are in power this month. You see, if you look at sentiment data, it's no doubt, you see, usually it's either bulls or bears are in control of the month. We do contrarian approach to sentiment data, as you know, and you see that it's since the beginning of the month there is no question about the dominance of the retail bears or algo bears, because now most of trading done by algo on Myfxbook. So the algos and the retailers selling, it means the price will be going up the rest of the months. Very likely all the way to the rest of the months we will see bullish action still. I don't expect a reversal until we dance around MR1, median pivot. So what is this below here? I have it's IDX. Sometimes I use IDX. It's a step IDX. You see, it sticks higher as long as price moves higher. You can use it for exits, you know. You see, it was ticking higher. Here there was no question that you had to go long. We had this morning star formation. It looks like a morning star. You see here above the monthly close, previous month's close, the black line. and the red was above the blue and significantly above. It was holding at those higher levels, and you see ADX was sticking up. It's not a line ADX, it's a step IDX, which is better because you can see exactly if it ticks higher or lower. Here it was the first tick lower, it was signal to exit, and after it hit the roof, you see, and then immediately when all those stops of those long traders had been taken out, as I told, about this high here, it's immediately the number of short lots, those who have been short, who have been stopped, I'll drop it immediately from 30,000 lots to 23,000 lots. You see, they lost the money. You can imagine 20,000 lots lost in loss. What kind of pain it caused to those shorters who have been shorting here now in April. For some reason, price moves the opposite way to the algos and retailers. Algos is the most of traders, small traders now. On Myfxbook, I look at all the systems. It's all algo trading, and they are all going against the price, like doing the opposite what the price is doing. So, for some reason, there's not so much. We call this retailers, small speculators, but to a great extent, those are algo traders. We are trading against the algos, dumb algos. Let's say so. Let's go back in time a little bit more. I'll teach you a bit more about Camarilla pivot points, which is important. We will go back in time to, let's say, to August, September last year, and see how price behaved around Camarilla pivot points. Here you see we started the month below the opening range. We drop it to the reversal level at S3 reversal level, the pink line. It is a reversal level. You have to watch the candles which form around the reversal level, and here you see this kind of pin bar, bullish pin bar. It means that the price would be reversing here, and it did reverse, and you know where it's going. It's going back to the opening range, back to the close, and sometimes it goes above and goes to another side. It went here to another reversal level, the top reversal level, H3 or R3 pink line, and there it's immediately reversed with a retest and shot back to the close. Then it went again to the reversal level on the other side, and look at this candle here at the reversal level, rejection to the downside. It was a sign that price will go to break the floor. The September floor was broken, you see, with just one candle, and immediate drop to the target L5 or S5, whatever you call it, the black line, the target level, breakout target. After the breakout through the floor, price drops to the breakout target S5. What it does at S5, it goes back to the floor, and that's exactly what it did. It reversed it. You see, you could even use the trend line here, the mark trend line, to see that this reversal was true. You see the breakout candles through the Tom DeMark trend line I draw. You connect two recent shadows. It's a valid breakout, so we could easily go long here if you would see this and target the floor. That's exactly what it did. So next month, but you also have confirmation, come on, from sentiment data. You see the blues were above the reds significantly, like all the months, most of the months. So there was no doubt that you have to short that month, and when we hit the target R5, you know it's the bottom, because usually price rarely goes below the target, the monthly target R5. So, and usually those breakouts through the floor or through the ceiling happen at the end of the month or at the break of the month. Price can slide through at the ends of the month. They rarely happen at the start of the month, usually at the end of the month this happens. That's what I noticed. So let's go next month. Here you see price was closed above the opening range. Then you know it's going up. Where it's going? You know it's going to the reversal level. R3. That's what it did. It went exactly there in October. There it's kind of reversed. You could see the rejections also, the type of candles at R3. It rejected there, went back where? To the close. Close it below the close. Close it below the opening range. Close it below the opening range. And you could see also the change in sentiment. There's more bulls coming, dumb bulls coming, because price moves opposite to them, and it didn't quite make to the reversal level. Kind of strange. Missed it by 9 pips. And it went back to the close, and then it went to again to another reversal level, reversed there and went where? Back to the close. It's like reversion to the mean with Camarilla is common on monthly Camarilla pivot points. Reversal to the mean, also on the daily and weekly. Here again, reversal to the mean at Camarilla level. Then here we saw a kind of reversal, but price pushed it up, broke through the ceiling, through the roof, and ended where? At the target level, HR5. It even made to 6, you see, but the next month. But I wouldn't trade above the 6, above the 5, target 5. To this moment, I wouldn't go along here. Anyway, next month was clearly bullish, because you see most of the months red was above the blue, and the bulls stayed below 5,000 lots. It wasn't very strong bullish month, because you see the red line didn't stay also at very high level, around 15,000 lots the reds were, but it was enough to keep price driving up as it goes opposite to the algos and the retailers. It didn't reverse at the reversal level, and it just stayed alone it. You see, it stayed along the reversal level. So let's go further. Now we go to January. After NFP in January, price changed, the trend changed. There was an NFP news here. We had a reversal below, we had the double bottom below the reversal level. First we were shorting, and then it was double bottom, and then price broke through the roof. It didn't quite reverse. It kept bullish, because you see here below bulls, the blue line was below 5,000 lots. They didn't have any power at all that month, so it just kept going. It broke through the roof, but it didn't quite make to the roof that month. You see, it missed the roof by 20 pips. I mean, the breakout target R5, the black line, was missed by 20 pips, but it made it there. You see, it made it there. Now in April, actually, it made it in April. Now we did hit that target. Takes some time. Sometimes you have to look forward. So, but usually at the start of the next month or in the end of the same month, it makes to the breakout target R5. So next month, reverse it at Camarilla R3. You see here reverse it, went to the other side where we didn't see a reversal. We saw a breakout. This happened to be a fake breakout. Here a fake breakout through the February floor. The blue line February floor was a fake breakout because it was a counter trend. This was the NFP driven bonds against the global trend, against the interest rates. That's why it didn't continue. This high was this low here from January was respected and not violated, because if you violate this low, then EURUSD interest rates wouldn't make sense. What doesn't make sense on a larger scale, on fundamental reasons, is hiking rates and euro is going down, doesn't make sense. So it had to respect at least this low, and then kept high, moving higher. So you have to go with the interest rates. EURUSD interest rates follow them, and if EURUSD hiking rates, euro will be going down. So the pullbacks will be, they can be significant, like here it was a pullback of 480 pips, but overall the global trend on daily was bullish. That's why at least this low, January low, was respected. Both, it was respected in February and it was respected in March. January low after the interest hike was respected, never broken. It's kind of safer to trade with interest rates because your stops will be safer if you have huge big stops and if you have big targets. So next month we started bullish immediately about the Camarilla level, about the Camarilla opening range. It was a sign, it was the first sign that the month will be bullish as long as we break through the opening range. It was the first sign of the bullish month. And also you see that the month will be bullish. You could see also here from sentiment data, we immediately by the 2nd of March we had the reds dominating about the blue. Another indication that the month will be bullish because price moves opposite to the reds or opposite to the color. And this was the case, you see. But it was a kind of tricky month because there was so much mass and sentiment data as never before. As never before in the past. You see, usually it's like either one or other thing dominates pretty easy, but much was hard, but still you could study very well the sentiment data and you could make sense out of this, because you could see that the blue capped at certain level. Very important to use those levels, 5,000, 10,000, 20,000, 30,000 lots in my Myfxbook Outlook indicator, because you can see at which level the bulls or the bears stay through the months. Where is their home? The home of the blue line was at 5,000 lots. Sooner or later they come back to that level and you can have peace of mind. If price goes against you, you know that they will come back there, you know, and you can keep buying euro. So we had just sharp moves coming back, sharp moves coming back to their hole. And here you could see that the reds kind of had more power to maintain at high levels, especially here by the end of the month. They were completely dominating. They could breathe, they could fly at those levels, you understand? They didn't crash to the ground like the bulls did. So price moves opposite, I repeat. And of course you could use IDX, you know, step IDX. See, started clicking here higher, lower. Was clicking higher, 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 higher. You know, you have to go long. It clicked it lower here. Boom. Exit. When it clicks lower, you don't buy. As soon as it starts click higher, it's a signal to buy. Here you could buy. And also we rejected another kind of morning star formation, not really morning star, but a sort of. Morning stars are very reliable. We started clicking high here, you see, IDX started clicking high. So we just buy. Okay, we had to click lower here, but we still haven't made to R3, so you know price makes it to R3, reverses at R3. So you could at least catch this move of 90 pips, which is significant. Then after we broke through the roof, it's a bell. Be careful, be mindful, because when price breaks through the roof, it's not often makes straight to the target, to breakout target, which was 200 pips. Usually it retraces back to R3, to the pink line, and only then it starts trending to the target. And it can reach the target only in the next month's early. Next month, what happened? Now, it's not yet happened actually. It did reach by 1 pip or something, like half a pip or something. So it still will reach it next week. And also it has to reach it broke weekly roof, you see here. Stalled it kind of before weekly roof and then broke through, but didn't quite pull it back to the roof. We might pull back this next week. We might pull back to this level. Very likely this pullback might continue to this R3 and this pink also weekly R3 from current week before we go high, but it's not guaranteed. That's why I'm going to enter here. I don't care about this drawdown of 34 pips. Sometimes market does not always gives you a chance to enter in the right time. It might also just go away without you, so I better get on the train here than waiting, hoping that we'll get here. But it very likely it should then. But okay, small drawdown. But our target will be here at median R1, which is 100 pips. Is enough. So that is how Euro moves. I'm explaining you. It's one of my first webinars, live webinars. I don't do live webinars. Kind of a longer session. It's already 27 minutes. So that's how we study EURUSD. We don't use subjective data. Forget about oscillators. It's a pain. They give so many false signals. Oscillators, stochastics, RSI, all this stuff, MACD. It's subjective. It's not true, It is subjective. Everyone can interpret those depending on what time frame you. There are hundreds time frames, 100 signals in opposite directions. You can't rely on those subjective tools. Camarilla levels stay the same across all time frames. It is the same monthly Camarilla on 5 minutes and on daily. It's the same, and it is based on monthly close, monthly open, which is significant, monthly high, monthly low, which are the same across all time frames. There is no subjectivity whatsoever in Camarilla pivot points or yearly traditional pivots. Here I plotted them also. There's no subjectivity in them. It's the same yearly close, which is more important, yearly high, yearly low. That's the data is used for those levels, and they are significant, trust me. Then sentiment, it's real. Those are real people who are losing money. 90% of traders, you can see them here. You see they are trading 30,000 lots altogether. It's no joke. 30,000 lots here they have been trading. 67,000 lots. And been kicked out at this high, you see, at the previous high, because price pushed it up. It was enough to push up 46 pips above this high to stop them out, and the number of lots, short lots, dropped immediately by 20,000 lots of pain. It's not just money that people lose, it's terrible pain, because there are so many forex traders who offer their services and have no clue where the price is going. They are just, or take the others' money, and lead people to financial disasters, because they have no clue where the price is going. They're doing the guesswork, or they are launching algos which are doing stupid things, going against the trend, And I noticed that another thing, some traders who have been on trading, who've been trading for 6 years, 7 years, they completely ignore interest rates. They don't even look, they don't even consider the fact that ESB hiking the interest rates. They don't even consider this fact, and that this will impact euro going up. They don't think about this. They think like price will drop down 500 pips. For what? What reasons? What are fundamental reasons behind this, so that euro would go? Because he drew some line or support there, and trading for 6 years and ignoring interest rates. It's unbelievable. I just don't understand. You have to, those basic things you have to know, my friends. So you don't have to follow them, at least to know what are currently the interest rates of ESB and FAT. If it's 1-to-1, or if it's 0-0, euro still more likely will be going up, because it's more sensitive to ESB. Even FAT raises 1 point interest rates, yeah, it will impact the euro. It might be going down. So, but ESB interest rates are very, very important when it comes to euro USD. So here you see Camarilla pivot points back in the past, and let's go to daily. Let's go to daily and go back in the past. See at what size had been trading in 2020. The bulls had been trading at 71,000 lot. Can you imagine? 71,000 lots. And the bears have been trading after 50,000 lots. Year 20 was the most volume rich year in forex trading, because huge amounts of euro had been traded that year. Now we are still at very low amounts, trading amounts, but we are picking up. The size is picking up. You see, we are making high pushes in sentiment data. You see, to 56,000 lots. This is the highest for the bears since a long time, since many months, since December 2020. Bulls had never, the bears had never been trading at those levels since 2020 at 56,000 lots. And that's why we see such a rapid movement, you see, as now, of 500 pips, because bears are trading at big lot sizes, pushing it very high. Their lot positions, and its price goes opposite to them, you understand? So that's it about today. I wish you all the best. God bless you all in your trading, and success.